Learn the lingo. Hey folks, Len Fletcher here with Remax Moves, and I'm sitting today with Dan Michaud with Network Funding, one of our preferred lenders, and going to have a discussion today about interest rates. Specifically, how often do they change? Because I've heard that they change quite a lot.
They do. They really do. Interest rates can change daily. Sometimes we see a trend where they stay pretty steady for a while, but they're very much tied to the financial markets, especially the bond market.
Okay.
And so when there's news that affects the stock market, that also has a trickle-down effect to the bond market and to interest rates. A lot of times, on the other hand, when you hear about the Fed lowering or raising the Fed funds rate, people think that directly impacts mortgage rates. It really doesn't, because the bond markets usually have those changes already priced in. So we would have seen those changes more than likely prior to those announcements by the Fed.
Okay. So if an individual calls and looking for an interest rate today, it could be different tomorrow.
That's right.
Okay.
Absolutely. We try to help people understand that rates are specific to the actual day they're asking for that rate and the scenario they're asking for. So when somebody calls and says, "What's your interest rate today?" That's a really broad question. I always like to joke with folks and say, that's kind of like asking, how much does a house cost? Okay. It has to do with location and number of rooms and all that. It's very much the same with interest rates. Depends on the loan program, how long you need to lock for, how the length of the actual mortgage. How many points you want to pay for a certain rate. Some people are willing to pay points to buy down their rate, and others don't want to. So there's a lot of factors involved.
Okay. So if someone is wanting to buy a house and they're like 90 days from closing, that interest rate's different than if they can close in 30 days.
That's right. That's right. A 30-day lock is generally going to have a slightly lower rate, or sometimes the rate can be the same, but the cost for that rate is a little bit different. So it might cost them 0 points, in other words, to do a 30-day lock, but a 90-day lock for the same rate might cost them a 1/4 percentage point or maybe a 1/2 percentage point in fees, not necessarily the interest rate. So it can be a little more costly to lock longer.
Okay, all right. So interest rates are not static, and it's kind of complicated how they're all figured out, and also before you decide to make the jump into buying a home and want to know more about interest rates, give Dan a call. Till next time, have a great day.
Thanks.